Pavel, how are you, my trading warrior brother? Welcome back to F.A.C.E.
Hi Dale, do you hear me?
Got you loud and clear, Pavel. How
Great.
are you?
I'm great, and it's great to be
Ti-
back
yeah, time flies, huh?
for sure.
So, what's on the docket today?
So I will share the screen, hopefully.
For those of you who haven't heard Pavel before, pay attention because his website is spreadcharts.com. Many of his forecasts have played out since I've been talking to Pavel. So, um, good idea to see what he's thinking. Where are we going, buddy?
Thanks. So I have prepared a few charts. So let's take a look at them. Basically, we are in a stage where the risk reward for any particular opportunity is not great.
Okay.
There was a great risk reward for the US dollar at the beginning of the year, which is something we really stressed about in our New Year's outlook. So that was great, when the dollar index was around 102. But we're no longer there. I still think the dollar is a great opportunity, but I will show you what I'm thinking about right now. And
Okay.
I'm thinking about the relationship.
Also, euro, traded up to when we talked a long time ago when we were searching for a bottom in euro and we had not achieved it yet. You and I were looking for a top in the dollar, and one of your targets back then was 109. So I recall that, probably amazed that I recall that. So that was a nice target level. We only took it out by 100 pips. But go ahead. That's yesterday's newspaper.
Oh, no problem. I mean, when I take a brief look at the dollar index, when the dollar was starting to correct, we told our users that we have two targets. The first target was here around 104, 105, and the second target was basically between 101 and 102. And we reached the second target, so that played out really well. And when we were at these levels, I was really bullish about the dollar, and I can disclose that I have a sizable dollar position. So I think this is playing out really well, and this will continue. As we were discussing last time, I think we will see a higher high on the dollar. So the dollar run, in my opinion, is definitely not over. But right now, as I said, the risk reward from the trading perspective is no longer as favorable. And I mean, the major, phenomenon we are observing right now is the resurgence in inflation. And therefore, the rates are rising. So that, I think, will be the major catalyst for the dollar. But I'm thinking, what I'm thinking about right now is what will be the path to the increase in interest rates? Because I watched
I'm glad. Did you watch it? I think that we're, we could have a little shakeout move from 4% back to about 360 before we go higher.
Yeah, I watched your conversation with Blake, and I like your approach that you're data dependent because I have the same attitude towards market. And what I'm watching is, I have a chart somewhere around here. I'm watching the real yields. I think that's more important than the nominal yields, because it takes not just the nominals, but also the inflation into account. And what I'm thinking about, let's first take a look at the inflation. I think when you take a look at the monthly inflation data, right now there's a clear evidence of reacceleration in inflation. What is unclear right now is the Fed's reaction function. There is no doubt, I think, that Fed will be forced to tighten, but the question is when or how aggressively. So that's the reason why I'm watching the real yields. For example, here I have the 10-year real yield, and I expect that we will go to 2%, maybe even higher. When I zoom out, you can see that
Yeah, because it's still not restrictive.
Yes, precisely. It's still not restrictive. And you take a look at the first decade of this century, the 10-year real yield was trading well above 2%. So I think we are going into this range between 2 and 3%. The question is, how will we get there? And I'm thinking about if there will be any kind of correction in the short term in the real yields, because that would be positive for precious metals,
equities, okay,
and also equities. Yes,
yeah.
that's sure. We think the bear market is not over, as we explained in one of our latest articles on our blog. But I do not have enough data to confirm that we are going down to 3,000 immediately. So there might be some intermezzo. And well, just I will get back to my original thesis, which was the relationship between the energy, the oil, and gold, because both these assets are sensitive to yields, especially the real yields. And as you know, we don't have the commitments of traders' data right now because of the ransomware attack on Ion Group, which is a software company responsible for developing software that many of these.
Oh, you can't get commitment of trader data?
No,
I didn't know
since the end of
the year.
January. No, since the end of January.
Oh my gosh.
Yes, because of the ransomware attack on that software firm. But the CFTC is now starting to release the old data. So the latest commitments of traders data we have right now is from the end of January.
Okay.
However, we do have commitments of traders data for the futures on Intercontinental Exchange Europe. Such as the Brent crude oil. So here you have the current commitments of traders data. On the bottom subchart is the WTI crude oil, and you can see that the curve is just ending at the end of January. But we do have the data for Brent, and you can see the further increase in net positions, speculative net positions. Yes. And what is even more interesting is when you take a look at net traders. I mean, not at the position, but at the number of traders who are net long or net short. And well, you can see when you focus on the middle subchart, the Brent futures, that we are really high. When I zoom out, you can see that we are at extreme. I can zoom out even further. So despite the sizable correction, sizable pullback in crude oil, and this is Brent crude oil, because, well, Brent is more important, the seaborne crude is more important for the global market than the landlocked WTI. And you can see that despite this sizable correction, people are still bullish, and I would even say euphoric. And you can also watch this in real time on Twitter. Many of the oil bros, large Twitter accounts with more than 50,000 followers, they are incredibly bullish. They are expecting immediate run to 150, maybe $200, whatever. And this fits the data I'm showing you right now. So
all right, well, go ahead and let's talk about continue where you left off. And maybe are you thinking of joining these crowds, or all these things you're commenting on? It's just something that you're an observer right now. People feel uncomfortable being an observer, and when you say there aren't a lot of good high probability setups right now, you're saying you're pretty much flat and you're just observing all of these different data sets.
Yeah, definitely. I will remain observer on crude oil for sure, because I wouldn't say exactly bearish, but I started to fade crude oil at the beginning of 2022, even before the war. I did not rule out further upside, but I just said, well, the market is overbought. There will be some kind of correction. My timing was not precise because we still had this run up, which is also associated with the war in Ukraine. But nevertheless, the crude oil has been going sideways and lower. And I still think there will be more downside. And what
I was thinking 65 or so. And you're bullish a dollar. Are you looking for a pullback to get longer the dollar? Look like, I'm wondering what you're looking to do in these markets. So you would wait for a break in crude to 60, right? And see how things look then. $65, one more low. I know a lot of people are looking for that.
Regarding crude oil, I do not watch the price levels as much as the contango. I think the contango is more important for the state of the crude oil market. And right now, what I wanted to show you is that there is an important level of, 2% contango, backwardation on Brent between the 7th and 4th contract. And this is, for me, this is a critical ceiling. Unless we break out above this level, crude oil will roll over and move towards 60s. And before the bottom on crude oil, emerge, I want to see contango in Brent, especially on the mid part of the curve, before I even start considering being bullish crude oil again. And getting back to your original question about the dollar and the precious metals, once again, I prefer to watch the gold-silver ratio rather than those prices individually. And, the gold-silver ratio turned higher, which...
There's my wedge. You copied me on that wedge.
Really?
Go ahead.
So we are heading higher. The next resistance is at 90. I think we will get there, So if you think about gold going to 1800, that would correspond roughly, really roughly to silver around $20.
Okay.
So I would probably wait for the gold-silver ratio to get there, and then I will look at the high-frequency data for precious metals, and I would like to see some, material strength in the market, because unless we get this strength, I will fade precious metals, because eventually, in my opinion, silver will make a new low. I think we will go below the previous low that was around $18. I think we will make a new low, maybe this year or the next, I don't know. But I'm definitely looking for the gold-silver ratio to spike above 100, which would correspond to the low in precious metals. And I'm just not sure if we are going there right now, or if we go to 90, then get some consolidation and the gold-silver ratio once again drops, maybe even as low as 70. That's the most important level for me right now. So the 90 and 70, and then go above 100. So if we get the scenario that you was talking about with Blake, that would correspond to the gold-silver ratio going to 90 and then dropping again to maybe as low as 70. And that would be bullish for precious metals. That would mean the Fed's reaction function would be kind of delayed, that they will react with some delay that would allow the real yields to drop. And, that would correspond to the drop in the dollar and bounce in precious metals and so on. And so, as I said, you wanted to know my plan. My plan is to wait for the gold-silver ratio to get to 90. Then I will reassess if I will see the material strength in the high-frequency data for silver and other precious metals. I may consider a tactical long position in silver or precious metals in general. Unless I see that material strength, I will just fade this. And I'm definitely not interested in energy right now because I told you why.
Okay, and if we had a little more dollar strength, I've noticed there's a decent correlation between the gold-silver ratio and the dollar going up or down. So if the gold silver ratio is going to 90, I know you're looking for new highs in the dollar. What do
Yes.
you think that takes the euro down to? About 104, 104 and a half when the XAU is 90, gold silver ratio is 90.
When the gold silver ratio gets to 90, maybe the euro will approach parity. I'm not saying it will go below parity, but maybe 1.0102, something like that. I don't know, but I don't have a target for euro. In the long term, I'm bearish euro and European currencies because I'm watching the situation evolve firsthand.
Where in Ukraine? Ukraine?
No, it's not necessarily related to Ukraine. It's related to the internal policies, economic policies of the Eurozone and general European Union. And the economic policies are just, they don't make much sense. So that's the main reason. Europe is slow to innovate. It's basically shooting itself in the leg regarding the energy policies. It does not have a energy policy that would make sense, and these are the kinds of things that will make Europe uncompetitive. These are the reasons for the euro. I think the euro is going to 0.8, maybe even lower, but definitely my long-term target is at 0.8, the euro against the dollar, but this is the long-term target.
Let me ask you this, you follow some cycles, right, Pavel?
Cycles, not necessarily. I mostly follow the data. The real-time data. So
okay, I just know a lot of people that are pointing towards this July timeframe as being real important. Some people talking about credit events beginning this summer. So just wanted to know if you're anything in the markets told you about that.
No, I don't know. And once again, regarding the dollar, one last thing I wanted to show you, and this is something we alerted our people on our users on Twitter and elsewhere about the dollar strength, is that I'm watching the distant spreads between the SOFR futures, basically the secured overnight funding rate. So we have the 1 month and 3 month SOFR futures data on spread charts. And this is what alerted me to the strength on the dollar, besides the gold silver ratio, because we got this breakout on the SOFR futures spread that corresponded with the strength on the dollar. This is the September 2023 spread, and this is below here is the December 2023 futures spread. So this is the kind of high frequency data I was talking about, and if we get a correction on the dollar and a bounce in precious metals and euro and so on, I think these curves will make a correction. They will mean revert. So this is something I'm watching in regard to the high frequency data. So I'm not so much into cycles because I'm a scientist and I know from physics how the cycles can be deceptive.
They can invert. They do all kinds of crazy things.
You can find many cycles in the data, and most of these cycles are, it depends on who looks at the data. So it's very similar to the technical analysis. If you do technical analysis on some asset, one person would say the chart is bullish, another person would say the chart is bearish. And I think it's the same with cycles. We can find many cycles in the data, and pick the cycle you like. So that's why I prefer to look at the at the data.
Well, my takeaway in the pearls that you dropped on us today is the gold silver ratio 90. Watch that area for a possible turn, and that would make silver your preferred long if you thought it was going to go back down to 70. What you talked about in crude, to be patient and that what you're going to be looking for confirmation to get long. And it's probably when all the Twitter guys start talking $40 oil.
Yes,
And
for
you
sure.
know, and your outlook on the dollar. So really appreciate your work and you sharing it with us. Really.
Thanks, Dale.
Yeah, good stuff, Pavel.
Yeah, thank you for bringing me back, and hopefully see you next time.
Yeah, well, in fact, the best way for people to follow you would be at your Twitter handle at spreadcharts.com. Is
For
that the
sure,
best?
or just go to our website, this spreadcharts.com, because we have our own analytical software that you just saw me using in this video. So you can sign up for our app, and either for the free version or the premium version with the research and other advanced features. And also, as you said, you can follow us on our Twitter because we are pretty active there, commenting markets and so on.
Okay, everyone, my trading warrior brother, Pavel Hala, sharing his insights with us and some great things to include in your intelligence gathering. Check them out. And thank you again, Pavel. I'll get a hold of you on Twitter and we'll talk in the spring.
Thanks. Bye.
All right. Pavel Hala at spreadcharts.com, everyone. So remember, don't just count your pips, Nick and Patrick and Ingmar and Barry. Count your blessings. You too, Laura. And I'll see everyone for Turnaround Tuesday. You're very welcome. People are thanking you, Pavel.
That's great. Thanks.
And I'll see everyone tomorrow. You could join the team in 20 minutes for the morning edge. Okay, adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.